What is up, everybody? It is Monday, October 7th, the start of a new week. And man, today's market was quite the chop fest here in the beginning, in the morning. But if we notice, we had the big move here in the afternoon, which was unfortunate because I don't trade PM session. But regardless, I ended up getting a nice little green W. Very small, nothing crazy, but let's get into it as to why I even took those trades. So starting out on the 4-hour time frame, there was really not much that we could see. I knew since it was a Monday, we were going to end up getting short targets. So either this upside external range liquidity or this downside internal range liquidity. This was on the 1-hour time frame, so I'll get into that after. I had been wanting to see price close above this level. This was yet on Friday. I had that marked out. I wanted price to close above that to then continue moving on higher towards this draw right here. We did get a close above it, but it was very minimal, nothing crazy. So I considered this to still be holding us down. And so we did get a move down here in the morning from last night. Overall, I was just still expecting price to move further down just because of that. And then let me just see what else there was. Yeah, so the fact that we had such a weak close above that bearish fair value gap, I didn't think we were going to move higher. So switching over to the 1-hour time frame now, same exact thing. We had a 1-hour fair value gap, which this one we didn't claim above it. It still continued to hold us down, and the same thing for a 15-minute fair value gap there. It continued to hold us down. So overall, these PD arrays are still pushing price down, okay? Which meant we were going to target some kind of internal buy side liquidity or sell side liquidity, I believe. Mainly because I think we're trying to recover here and then move back on up, but we'll see. With this end of day close here, we'll see what happens. But yeah, that was the thinking. I was bearish this morning, so I switched over to the 15-minute time frame just to see what I could see here. We were kind of within this range, specifically from this high, to this low. We had a 15-minute bearish fair value gap right there. We had a 15-minute inverse fair value gap where we did cross above it and then traded into it and then continued to move higher. I wanted to see where price was at 10 a.m. here just to see if we were going to get a close above that. So at exactly 10 o'clock, we did not, but then the next candle did. So that candle was the one that I traded to go higher. I did, because we failed to close above that there, we closed down here. I wanted to get in on a short trade and target lower because that was my initial higher time frame bias. Before I figured we were just going to move on down. This was more than enough of a retracement to then go down lower. But clearly price wanted to retrace a little bit higher before dumping. So that was my plan. If we ended up getting a close above this 15-minute fair value gap, I was going to target bullishness all the way up to this draw on liquidity. Target bullishness. That's not really a good way to put it. I was going to target higher because I was bullish to hit that draw on liquidity. But because we were failing, I wanted to see lower down to that draw on liquidity there. So let's get into the market open. Overnight for the London session, we did take out the Asian low. So it was kind of looking like an accumulation, manipulation down, distribution up type of day. So that was what added confidence to the second trade here. But going over this first trade, let's turn on the quarterly cycles indicator here. What made me bearish initially here on the third quarter was the fact that we did accumulate here in Q1. We kind of manipulated above these highs here. We took out these two relative equal highs. We didn't hit that one, but we got very close. So because we failed to then close higher of that level for 10 o'clock that I wanted here, I was looking for a short opportunity at that moment because it just seemed so clear to me that we were going to drop. And so I saw this bullish fair value gap get created. I saw this bearish fair value gap be created as well. Price comes up, taps into it, respects it. Then we have a 1-minute candle close below that bullish fair value gap right there. Very small, I might add, very small. But regardless, I entered in shortly after that. Got a little bit of a retracement back up into it. I entered in, put my stop above that swing high right there, and I was targeting my draw on liquidity. And this was going to end up being a 3.72 risk to reward. And then here, I'm glad that I did this. I had this swing low that I wanted to see it attack through and then make break even after the fact. And as you can see, price comes in. I'm up a fair amount, but not as much as I would like. And then continues to move back on up and stops me out at break even. Now that was very interesting for it to do that. I wanted to see if this inversion fair value gap was going to hold us. Clearly we consolidated a little bit more here. Now my next trade was going to be in the opposite direction because we did not distribute lower, which meant that we potentially wanted to move higher, and we were holding this 15-minute inversion fair value gap. So that made me switch my bias for the time being. Here we have that 1 minute fair value gap that we originally tested and got rejected off of. If we ended up getting a candle closure above that, I was going to market order in after the fact, some kind of small pullback. So I market ordered in here, put my stop below that latest swing low right there, or was it this one right here? Sorry. Mainly because we had that high, a low, lower high, higher low, and then created the higher high. So I wanted this higher low to be my stop because I did not want price to then displace through that. If it did, that meant that we were not going to continue higher. We are going to continue going lower. So fortunately, price comes down. I'm a little bummed out here that we are in the red. Continue to hold, let the trade play out, starts to move back on up. We displace above that high, felt very good, and stalled here. So this is where I decided to take some of my position off. And then as price continued to then further consolidate in this area, we started to hit into Q1. We started to retrace a little bit. I did not like this price stall. And as you can see, I closed the rest of my position out there for a pretty much 1-to-1 risk to reward on this trade because price was just not giving any kind of setup higher. So all throughout the day, I was bearish, even though this action, obviously this action here, look, we got lower highs continuously being made and lower lows being made. Here they were higher lows, but overall the higher highs were not being made. It was just lower highs. And we still continuously held this 15-minute fair value gap. We tested it once, twice, 3 times, 4 times. We didn't reach it this time and then dropped. Now the trade that you could have taken to be able to capitalize on this drop itself, if you knew the draw on liquidity was going to be there, right? Based off of the analysis that we had made on the higher time frame, you wait for a Q3 or a Q4. So here we have afternoon, the PM session starts. Here is the accumulation of Q1. Q2 kind of drops, doesn't really do much. Q3 starts to move up in this direction. Okay, so I guess you can consider this manipulation lower if you really want to see it that way. It wasn't super clean, but it kind of made sense where we distributed up. Now here, if you are bearish, you would, number one, not want to see price close anywhere above this swing high, which as you can see, we didn't. This is the prominent swing high, right? We have internal swing highs, but I'm looking more for the external swing highs that get created. And then we get a higher low here. Okay, that's important to note. To see, did we get a close above here to create a new swing high, a higher high? No, this is now a failure swing high. Higher time frame is bearish. 1 minute looked like it wanted to become bullish, but we have a failure swing high. We have a bullish fair value gap here that gets invalidated within Q4, which can be the reversal after the morning session. So you could have entered here. As soon as that candle right there invalidated it, could have put your stop right here, could have put your stop right there, wherever you wanted to. I usually do off of the external swing highs and then target pockets of liquidity. I mean, right here, you're at a 4-to-4 risk to reward. Okay. Oops. Put that back. Price comes down, doesn't tap it, comes back up, taps back into your entry, and then boom, price displaces lower. Maybe you could have put your stop right here. Your first take profit right here at that swing low, that higher low that got created, and then put your stops to break even. Even if you did do that too, that's a 1 to 3.38 risk to reward. So overall, great. You could have held on. You obviously would have gotten stopped out to the tick right there. As you can see, that candle right there would have stopped out your break even runner. But let's say you don't like to put it to break even. Maybe you keep it at the full stop loss because you take the majority of your trade off, and you like to hold one runner to the very end. Well, shortly after that, boom. Now let's say you got stopped out on your runner right there. I always advocate there is always a second entry. No matter what, there is always a second entry, okay? Stopped out, starts to move on down, right? There's a bullish fair value gap right there. That one right there, that created that inversion. This candle right here, okay? I put a long tool down. This candle created that 1 minute as an inversion. Put your stop above that high. Target the draw on liquidity. That's a 3.45 risk to reward. There's always going to be another entry. As long as you know what the higher time frame draw is going to be, there's no reason for you to sweat it. Ever. Just be calm and wait for that next entry to form. Yeah, your runner got stopped, but then you get in here and you put your stop above that high. Price, consolidates a little bit. You're in a little bit of drawdown. Nothing crazy though. But then what does price do? It just tanks and it hits your take profit. So just be patient. There's so many ways to enter. Maybe you missed this first entry here. Wait for a bullish fair value gap to get formed. Once that gets invalidated, I mean, really the ideal entry would have been this candle right there, because you see this bullish fair value gap got invalidated with this one. Put your stop above that high again, target the draw on liquidity. Could have taken off some runners or taken off TP1 here and then put your stop to break even. Obviously price never came back to it. Boom, full take profit hit. So that first trade that I had was the right thinking, but I was just in the wrong timing of it. It wanted to come back, sweep a little more internal high before going lower, okay? And that's okay. I'm totally fine with that. This price action I did not get chopped up in. I don't trade PM session, but I should probably start doing that, where if this didn't give any kind of good setup, it was within the range of the London session, PM is going to be the move. So come back around after 1 o'clock maybe. I mean, this setup formed at 1 o'clock. And then if overall on the day in New York session, we were just super choppy all day, no good setups, then the Asian session might be a good setup. Who knows? Who knows? So hopefully you guys ended green. I know it was a little bit of a tough read in the morning, and the PM session was what gave a really nice trade, but we have the rest of the week ahead of us. Let's finish the rest of the week off well. Don't let today's loss affect your future gains, and I will see you all tomorrow. Peace.